So hi everybody, this is sotck. I'm Giacomo, and today I'm with James Collerman. He is a contributor on Seeking Alpha. He has the CPA, so he should be pretty good in accounting. And today we're going to talk about Excel Fleet, and he has his own outlook on the company. He'll explain why the company is in the shape that it is right now. But before we get into the company, James, please introduce yourself, tell us what you do, and then we'll jump into the presentation.
Hello, Giacomo, and thank you for the opportunity to be on your channel. My name is James Coleman, and I have been a Seeking Alpha author since 2017, during which time I have published 42 articles. I am a former CPA, and my articles often focus on an analysis of the company financial statements. Today, I am here to discuss my article about Excel Fleet Corp, which trades on the New York Stock Exchange under the ticker symbol XL. As you can see, the title of my article is Excel Fleet Corp. The past is prologue and then some. Thank you, William Shakespeare, for being the inspiration for that title. Excel Fleet is based in Boston, Mass, and was formed on 12/21/20 as a result of a business combination between XL Hybrids, Inc., a privately held company, and Pivotal Investment Corporation, a publicly traded special purpose acquisition company, otherwise known as a SPAC. The stated vision of XL Fleet is to become the world leader in fleet electrification. XL Fleet's suboptimal stock performance year over year is shown on this graph. The stock is down 90% year over year. Seeking Alpha's quant rating for XL Fleet is a sell, and the profitability and momentum factors are graded F, which is evidence of waning support for XL Fleet stock. For those viewers who may not be familiar with quant ratings, Giacomo, they are derived by measuring a stock's financial metrics against other stocks in the sector on the basis of value, growth, profitability, momentum, and analyst earning revisions. As a point of information, on 2/11/22, 6 days after the publication of my article, XL Fleet hit a new 52-week low. Now let's take a look at XL Fleet's 3 core financial statements from their 10Q, which was filed with the Securities and Exchange Commission for the 3 months ended 9/12/21. My key takeaways from my review of XL Fleet's 3 core financial statements, as we can see, their consolidated balance sheet shows an increase of $37.1 million. However, this is largely due to the issuance of public warrants in the amount of $85.6 million, as explained in the article. XL Fleet's condensed consolidated statement of operations shows us that for the 3 months ended 9/30/21, revenue was $7.6 million, or a decrease of 20.1% year over year. And for the 9 months ended 9/30/21, XL Fleet has a loss from operations of $38.0 million, or an increase of 185.1% year over year. the condensed consolidated statement of cash flows for the 9 months ended 9/30/21 show us that the net cash provided by financing activities was $85.4 million. In other words, Giacomo, XL Fleet's increase in cash was clearly not due to operating activities.
Okay.
Based upon my review of this financial data, I developed pro forma financials for the year ended 12/31/20. And they forecast revenue of $12.8 million based upon year-to-date revenue of $7.6 million and Q4 consensus analyst revenue estimates of $5.2 million. The loss from operations of $43.5 million is based on a year-to-date loss from operations of $38.0 million, which I referenced earlier, and a projected Q4 loss from operations of $5.5 million, which, as I state in my article, is a conservative number. These projections would mean that XL Fleet's 2021 revenue would be $7 million, actually $7.5 million less than, or 37% lower year over year, and $62.2 million less revenue, or 82.9% lower than the $75 million revenue forecast by the XL president and founder in an CNBC interview on 12/23/20. I consider these pro formas are largely on a best case basis.
Okay, so you expect results to be a bit worse than the expectations and what the company officials state, right?
Yes, and I make that statement based on the fact that Q3 revenues from the sale of drive systems totaled $0.6 million, or 95.2% less than the $6.3 million year over year, quote, due to negative impacts from ongoing supply chain issues, including microchip shortages, that have led to a lack of new fleet chassis. Since it is likely that these issues will also affect Q4, this indicates to me that the Q4 consensus analysts' revenue estimates of $5.2 million may not be realized and could possibly be a big miss.
Okay.
The World Energy Services LLC acquisition, which was announced on 5/17/21, was called highly complementary by the company. The purpose of this acquisition was to further the strategy of XL Fleet's grid business to provide a suite of charging and power solutions to support fleet electrification adoption. XL Fleet stated in an SEC filing that World Energy was, quote, a profitable business with $18.0 million of revenue generated in 2020, end quote, which translates ratably to $4.5 million per quarter. However, the Q3 revenue for the whole XL Grid segment, of which World Energy is a part, was only $2.6 million. In my view, this material difference calls into question whether XL Fleet will realize the anticipated benefits of this acquisition, and the time frame appears uncertain. In addition, I also pointed out that the preliminary allocation of the purchase price of World Energy assigned $8.4 million of the $12.5 million, or 67.2%, to goodwill. I also stated in my article that XL Fleet made this acquisition because they realized that the total addressable market for fleet electrification simply is not nearly as robust as they envisioned when the company was founded in 2009. My introduction to the company dates back to 2012, when I attended the MIT Energy Conference. At that time, I was very impressed by both the technology showcased by the company founders and their representation of a 3 to 5 year payback period. However, if we fast forward to 2022, this space is now crowded with direct competitors, Lordstown Motor Corporation and Workhouse Group, Inc., and the growing presence of industry giants General Motors and Ford Motor Company, which will present serious competition for XL. Since the end of Q3, there have been major changes to XL Fleet's leadership team as a new CEO began on 12/1/21. On 2/2/22, XL Fleet announced that the company CFO, who had been in the position for less than a year, resigned as of 1/31/22, quote, to pursue other career opportunities, end quote.
Doesn't sound very good.
Based on my financial and operational analysis, in my view, XL Fleet has no clear path to profitability given their flawed business model and value proposition. It is of critical importance that XL Fleet management provides shareholders with reliable guidance at the upcoming 3/1/22 earnings call, as their credibility is at stake. In my view, Giacomo, the bottom line is that XL Fleet faces a very challenging 2022 as the company's passed its prologue and then some.
Okay. And another thing that you talked about is the valuation of the acquisition and the goodwill. Can you go a bit more in the specific about that and how you think the goodwill is not that appropriate? The valuation of the goodwill is not that appropriate.
That remains to be seen. The fact is, goodwill, Giacomo, is a very controversial accounting subject, and the quarterly statements.
Make it clear for those who are not that familiar with goodwill and all these accounting principles.
Goodwill is what they call a non-cash entry that represents the difference between the identifiable assets of the assets purchased and the price paid. XL Fleet will be issuing audited financial statements very soon, at which time there should be a final allocation of the price. Their auditors, and I've been an auditor of public companies, have to make a determination whether there's been any impairment, in which case they will make an accounting adjustment, which, as I said, is of a non-cash entry, but would affect the balance sheet and write down the asset, and also affect the income statement, and therefore incur a cost to the company. So it's premature to know what those numbers are, but as I said, the guidance provided by the company on 3/1 will shed a lot of light on that very important issue.
Okay. Okay. And just to make it a little bit more clear, can you explain a little bit what is the impairment test and how, and yeah, just explain it a little bit just for people to understand better the process, let's say.
Yeah, annually, each company is required to have what is essentially an independent party make a determination whether there's been any impairment to their assets. Now, the fact is that this acquisition was completed in mid-2021. So it may be or may not be an issue now. But the fact that over 2/3 of the purchase price was allocated to goodwill is a serious consideration in light of the fact that, as I said in the article, it appears that the Q3 revenue from the World Energy unit was materially different than representations the company had made to the investing public. So in essence, I strongly believe they're in a position where they have to justify that goodwill number was appropriate and that it will be done by a third party that's independent of the company.
Okay. Now it's more clear. So thank you for breaking down this company and explaining all the motivations that brought you to be a bit bearish about the company. And I really want to thank you. If you have anything else you want to add to the presentation, you're free to do so. And if not, I really want to thank you for being with us today.
Once again, I enjoyed the experience of being on your YouTube channel, and I wish you all the best of success. Giacomo.
Okay, thank you a lot. So this is it for today. I'm Giacomo. This is Hustle Hub. See you next time. Bye.